Taxes! Nobody likes them, right? But we all have to pay them. It's the price we pay for living in a civilized society. But here's the good news, you have more control over your taxes than you think. You don't have to just sit back and accept a huge tax bill. That's where tax planning comes in. It's not just for the rich and famous, it's for everyone. Tax planning is simply the art of arranging your financial affairs in a way that minimizes your tax liability. It's about keeping more of your hard-earned money in your pocket where it belongs. Think of it like this. You wouldn't wait until the last minute to plan for a vacation, would you? You'd research destinations, compare prices, and book flights in advance. Tax planning is no different. It requires planning and foresight to make the most of the available opportunities. In this essay, we'll explore the world of tax planning, uncover powerful strategies, and empower you to take control of your financial future. Are you ready to become a tax-savvy ninja? Let's dive in. The video is for educational and entertainment purposes only. It is not financial advice. Do your own research and do not invest more than what you can afford to lose. Imagine this. Two people, both earning the same income, end up with vastly different tax bills. How is that possible? The answer is simple. Tax planning. The one who planned ahead paid less. It's like having a secret weapon. There are different types of tax planning, each with its own benefits. Short-term planning focuses on immediate tax savings, like making a charitable donation before the year ends. Long-term planning, on the other hand, looks at the bigger picture, like strategically timing retirement contributions to minimize taxes over several years. Then there's permissive tax planning. This is all about taking advantage of legal deductions and credits that the government offers. Think of it like finding hidden treasures in the tax code. Purposive tax planning takes it a step further by structuring your financial transactions in a tax-efficient way. The key takeaway: don't just react to your tax situation, be proactive. By understanding the different types of tax planning, you can choose the strategies that best fit your financial goals and keep more money in your pocket. Tax planning is like a game of chess. You need to think several moves ahead. Short-term planning is like making a tactical move, while long-term planning is like developing a winning strategy. Short-term tax planning focuses on immediate tax savings. Let's say you're nearing the end of the year and want to reduce your tax bill. You could make a charitable donation, contribute to a retirement account, or accelerate certain expenses to lower your taxable income. Long-term planning, on the other hand, is about playing the long game. It involves making strategic decisions today that will minimize your tax liability over several years. This could include investing in tax-advantaged accounts like 401(k)s and IRAs, or developing a plan to minimize estate taxes. Remember, tax planning is not a one-size-fits-all approach. The best approach for you will depend on your individual circumstances, financial goals, and risk tolerance. Imagine this: you have the option to pay taxes on your income now or delay it to a later date. Which would you choose? Most people would choose to defer paying taxes for as long as possible. That's the power of income deferral. Income deferral is a powerful tax planning strategy that allows you to postpone paying taxes on income until a later date. This is especially beneficial if you expect to be in a lower tax bracket in the future, such as during retirement. One common way to defer income is through retirement accounts like 401(k)s and IRAs. When you contribute to these accounts, you're not taxed on that income until you withdraw it in retirement. This allows your money to grow tax-deferred, potentially leading to significant tax savings over time. Another way to defer income is by delaying bonuses or other forms of compensation. By pushing income into a later tax year, you can potentially reduce your overall tax liability. Untapped deductions, finding hidden treasure. Did you know that the tax code is full of hidden treasures? They're called deductions, and they can significantly reduce your tax bill. Deductions are expenses that you're allowed to subtract from your income before calculating your taxes. There are two main types of deductions: standard and itemized. The standard deduction is a fixed amount that everyone can claim. Itemized deductions, on the other hand, allow you to list specific expenses that you can deduct. Some common itemized deductions include mortgage interest. If you own a home, you may be able to deduct the interest you pay on your mortgage. State and local taxes, you may be able to deduct some or all of the state and local taxes you pay, such as property taxes and income taxes. Charitable contributions, if you donate to qualified charities, you may be able to deduct a portion of your contributions. Medical expenses. If you have significant medical expenses, you may be able to deduct a portion of those expenses. By taking advantage of all the deductions you're eligible for, you can significantly reduce your taxable income and lower your tax bill. Income shifting. Sharing is caring and saving. Income shifting is another powerful tax planning strategy that involves moving income from a higher tax bracket to a lower tax bracket. This can be especially beneficial for families with children or those who support elderly parents. One way to shift income is by gifting assets to family members in lower tax brackets. For example, if you have investments that generate significant capital gains, you could gift some of those investments to your children or grandchildren. Another income shifting strategy is to hire family members. If you own a business, you could hire your children or spouse to perform legitimate work and pay them a reasonable salary. This can shift income from your higher tax bracket to their lower tax bracket. Income shifting can be a complex strategy, and it's important to follow the IRS rules carefully. However, when done correctly, it can be a powerful tool for reducing your overall tax liability. The future is now AI and blockchain in tax planning. Hold on tight, because the world of tax planning is about to get a technological makeover. Artificial intelligence, or AI, and blockchain are emerging technologies that are poised to revolutionize the way we plan and manage our taxes. Imagine a world where AI-powered software can analyze your financial data, identify tax-saving opportunities, and even file your taxes for you. That's the promise of AI in tax planning. AI algorithms can sift through vast amounts of data, identify patterns, and generate personalized tax planning recommendations. Blockchain, the technology behind cryptocurrencies, also has the potential to transform tax planning. Blockchain can provide a secure and transparent platform for storing and sharing financial data. This can streamline tax reporting, reduce errors, and minimize the risk of fraud. While these technologies are still in their early stages of development, they hold immense potential to simplify tax planning and make it more accessible to everyone. Don't go it alone. Seek expert advice. Navigating the complex world of taxes can be overwhelming. That's why it's crucial to seek expert advice from a qualified tax professional. A tax advisor can provide personalized guidance, help you develop a tax plan, and ensure you're taking advantage of all the available deductions and credits. Think of a tax advisor as your financial coach. They can help you understand your tax situation, identify potential tax liabilities, and develop strategies to minimize your taxes. When choosing a tax advisor, look for someone who is experienced, knowledgeable, and trustworthy. Ask for referrals from friends, family, or other professionals you trust. Remember, tax laws are constantly changing, so it's important to stay up to date with the latest regulations. A tax advisor can help you navigate these changes and ensure you're in compliance with the law. Stay informed. Tax laws change. The only constant in life is change, and that's especially true for tax laws. Tax laws are constantly evolving, so it's crucial to stay informed about the latest changes that may affect your tax situation. One way to stay informed is to subscribe to reputable financial publications or websites that provide tax-related news and updates. You can also follow relevant government agencies, such as the IRS, on social media or sign up for their email alerts. Another way to stay informed is to attend tax workshops or seminars. These events can provide valuable insights into the latest tax laws and strategies for minimizing your tax liability. Remember, knowledge is power. By staying informed about tax law changes, you can proactively adjust your tax planning strategies and avoid potential pitfalls. Conclusion. Keep more of your hard-earned money. Tax planning is not just for the wealthy, it's for everyone. By understanding the basics of tax planning, you can take control of your finances and keep more of your hard-earned money. Remember, tax planning is an ongoing process, not a one-time event. As your life circumstances change, so too should your tax plan. By staying informed, seeking expert advice, and being proactive, you can navigate the complex world of taxes and achieve your financial goals. So go ahead, take charge of your taxes and start planning for a brighter financial future. Special thanks to Wikipedia for providing a structure of knowledge. Thank you for watching our channel. If you found this video helpful, please like, subscribe, and hit the notification bell for more insightful content. Stay tuned for our next video.